Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, and for those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel I'll be providing some stock analysis and also an update on our $1 Million challenge, so please stay tuned. In the previous video we did a stock update with ticker symbol ABML. There was a new analyst insight into the stock, so please refer back to the previous video for details of ticker symbol ABML. So before we start today's stock analysis, a quick update on the $1 Million challenge. So if you have a look at the screen here, this is a journey from an investment of $1,000 to $1 million. We're looking at 201 trades. Each trade we're looking at an average of 3.5% return using compound return investing. So it's not 201 consecutive trades, it's 201 trades with an average return of 3.5% fully invested with compound. We also have a special spreadsheet with specially chosen stocks, including high risk and low risk stocks for the challenge. The Discord community is growing. We're almost at 300 now, and everybody is working together in a team in the challenge. It's not a competition, so the intention is for knowledge, information, trading tips, chart analysis, technical analysis and trading tips to be shared together to help everybody as a group and as a team to complete this journey. So details in the description below for anybody wanting to join us on this journey. After a number of requests, today's video is a special edition video looking at a potential calculation for the dividend for investors of the previous the held company on the Nasdaq trading under ticker symbol TRCH. So I have covered a calculation for a dividend in a previous video, so please refer back to that. However, most of the calculations that were carried out previously are actually out of date, and the reason why they're out of date is at that time it was more in terms of an unknown factor of how many preference shares were going to be used for the calculation. So that information I've been digging, and I have been looking for this potential information, which I think is very important in terms of a calculation. So let's start by having a look at the information I found with regard to how many shares there are that could potentially qualify for this special dividend. So the first thing I'd like to do is give a shout out to Skips Clearing on Twitter. So this was a very useful request, and he tagged in George, and the question here from Skips Clearing is, "Hey George, how many Pref A shares have been issued? Question mark. You definitely know the answer to this. How about sharing it so we all know officially?" So this was tweeted on the 20th of August, and as we have seen quite often, George does interact with many of the posts on social media where he feels it's necessary. So on this occasion he did reply, and what he said, which I think is very interesting, is 164,923,363 million shares based on the report we got from our transfer agent regarding the Series A preferred shareholders. However, the last sentence is also very important, and looks like a lot are held in street name. Hope this helps. So basically he's finished off the sentence with an and he's basically said here there are potentially additional qualifying shares under street name, which is basically implying that they're held by brokers. So that means there is another figure that we need to now look at before potentially calculating the dividend. So the next thing I did, I looked for an SEC report covering the merger and potential dividend calculation. So this is what I found, and it's under section 2. So what we have here is the potential answer, and it says there will be a series of preferred stocks designated as Series A non-voting preferred stock. Constituting series will be 175 million. Each of the series of A preferred stock will have a value of 0.001, so that's nominated value, nominal value, to be determined before the 31st of December 2021. So let's now have a look at working out some calculations for this potential dividend. The first thing I'd like to clarify is in terms of assets, what did Torch have that was of value that could be used to determine the value of the special dividend. So I'd like to now give a shout out to Michael Hung, who did make a comment in one of the videos, and just to clarify, he was under the impression that Torch has had or has no land in the Permian Basin. The land is only in the Rio Grande Basin. So that's the assumption of Michael. So I did respond. I provided two specific links there, and I'd like to also give a shout out to the Italian Guru and Donald M. Italian Guru did actually tell Manuel to get out of here, and Donald M said they have land in both areas. So yes, I can confirm, Michael, you are wrong. There is land in both areas. So what we're now going to look at is a potential calculation for this land. Let's start by having a look at the Rio Grande Basin. So this was featured in one of my very early videos around about February, March time, 2021, when I first initially invested in Torch. So if you have a look at the screen here, this is from the original Torchlight investor relations presentation. Confirmation here in terms of acreage. So we can see on the screen here, another important point of interest is the headline here: Rio Grande project, new field discovery. So what is this new field discovery that they announced earlier in this report? So we're going to look at that in a second, but this also interesting here, we can get information with regards to the value, the amount of land. So we have confirmation here that it's 134,000 acres. So that's good news. That will be very useful in our calculation here. But in terms of characteristics at the bottom, I'd also like to confirm that this land is going to include assets in terms of oil and gas. So let's now follow that up by having a look at a news confirmation for this potential value of assets in terms of oil. So what I'd like to now do is share this article from April the 11th, 2019 from Yahoo Finance. The headline here is: Torchlight announces new field discovery, third-party reserve estimate of 3.678 billion barrels in recovery potential from unconventional zones. So this was excellent news for the stock. So this was one of the reasons I initially invested in tick symbol TRCH in terms of the potential value of the assets. Again, we have confirmation here of the amount of acres, and it's 134,000 acres in the Rio Grande Basin. Let's look at the final part of this article, because this is also interesting in terms of our calculation of the dividend. So just on the second page here, you can see a low case is 2.321 billion barrels, mean case 3.68 billion barrels, and the best case is a potential 4.975 billion barrels. So certainly the potential there in terms of oil could be higher, and it could be worst case scenario 2 billion barrels. So that will certainly have an impact in terms of valuation. And the next thing I'd now like to follow up with is confirmation here, again in the investor report here, of land in the Permian Basin. So if you have a look at the screen here, this is slide 11 on the presentation, and the headline here is Permian Basin acreage deals cost per acre. So this is a summary of this asset and land that they have. One thing that I will like to confirm, the value is the more significant value is in the Rio Grande Basin. However, this is still something that is going to be sold. An agreement is in place to sell this land. So in today's dividend calculation, I'm also going to take into account a potential value of the Permian Basin for the dividend. So I'd like to now share with you the first part of my calculation. So on the screen here, you'll see the headline: how much is the 134,000 acres of land worth in Rio Grande? So one thing that is going to lead to this valuation is having an understanding of the value of the land. So in terms of the land, we're talking about the Rio Grande land here, that it has the largest onshore oil discovery in 30 years. So before we go further, just to confirm that, in case there are any bears watching and thinking this is not true, have a look at the screen here, and again this is from the investor relations page, and the headline here from Torchlight Energy investor relations page is largest domestic onshore new field discovery in over 30 years. So Although oil was discovered, Torchlight did not extract any oil. The oil is still there, so whoever buys the land will have the responsibility of investing and extracting the oil. So that has to be taken into account also in terms of valuation. So if we go back to the screen here, let's now have a look at the calculation for the acreage. So we can see here that the calculations used in many estimates have ranged from a low of around about $5,000 per acre and a high of around about $40,000 per acre. So I'm going to use a figure of $25,000 per acre, and this is going to be based on the barrel of oil at the moment is around about $70 per barrel. Potentially it could go up, but the Saints estimate I'm going to share with you in a second is around about $24,000 per acre. So let's just have a quick look at the Saints estimate that was shared on the old Reddit Torch page. So I'm now going to share with you an insight into the Saints calculation here, which comes with the headline, "How much is the land worth?" ? So I'm just going to summarize some of the key findings from this post here. So what he has said is, first of all, there is confirmation that the Permian Basin has been agreed in terms of a potential sale there, and he's estimating that that could lead to a premium of around about $3.15 per share in special dividends. So that is just based on the Permian basin. So let's now have a look at what he said with regard to the Rio Grande Basin, which is the more valuable asset for the previous Torch business. So what he said here, that obviously Torch has a 72.5% working interest in it. It's 134,000 gross acres. In terms of selling it, we know it's oil rich. We know there is gas assets in there as well. And his calculation here that he said is, in terms of the reported average, he's basing this on around about $24,000 per acre. So my estimate now is going to be based on a little bit higher than that. So he's going for $24,000 per acre. I'm going to go for $25,000 per acre. One of the reasons why I'm going to go up a little bit more than him is, first of all, over time, the value of the land does appreciate. The other factor to take into account is, I believe, oil around about $70 per barrel will also give a little bit of premium. And the other factor is that we're not sure when the land is going to be sold, and the closer it is sold towards December, the more chance it should have in terms of a higher valuation, because obviously generally over time land does appreciate in value. So let's now have a look at my projected dividend calculation. So remember, the key thing here that is going to change is a potential higher value of the land, and also an increase in the number of qualifying shares. All previous calculations were done for less than the current 175 million shares that has been shared with George and with the SEC. So let's just have a look at my calculation here. So the net acres of Rio Grande are approximately 134,000. So that is factual information that is confirmed. Working interest is going to be calculated at 0.665. So that comes to 89,110. The average per acre sale, remember my calculation now I'm going to use for this projection is $25,000 per acre. So it's $25,000 per acre. We have 134,000 acres. So the Torch Rio Grande sales is going to generate $2,227,750,000. 10% legal fees going to possibly come to $222,775,000. And then if we look at now the Torch Rio Grande sales minus the fees divided by 175 million shares, giving us a potential dividend of $11.45 per share. However, I'm now going to do a very conservative estimate of just $1 for the Permian Basin, and you have seen previous calculation was around about $3, but let's just go on the conservative side here. $1 here to be added on for the Permian Basin sale, giving a total projected dividend calculation of $12.45. So in terms of what's going to happen in reality, that's going to depend on lots of variable factors, and the key factor that is going to happen is going to depend on the buyer or potential buyers. So the actual real sale is going to basically depend on if there are many buyers, then what we can have then is a potential bidding war. So if there is a bidding war, then that's good for us because it will lead to a higher price. If there is a shortage of shortage of buyers, then we could certainly have a lower price, because then the valuation and the management team will have less room to negotiate because there will be less alternative offers. So these are the variables in play: the number of buyers, the potential value of the land, and also potential value of the value of oil as well per barrel. The final thing I'd like to now look at is again a question quite often asked in the comments, and that is with regard to the shorts. So before we look at the answer for this, in terms of will the shorts have to pay the dividend to the original shareholder, I'd like to give a shout out to one of our Discord members here on the screen, who is our technical analyst and a very valued member of the Discord, who provides lots of chart analysis, specialist information with regard to short interest, and this is his statement. I'm just going to summarize for you here. So the way I understand it is the shorts and naked shorts that were in Torch on the X date have to pay whatever the dividend turns out to be. That is a given. Then the shorts and naked shorts that were in there at the time of merger will only be able to cover once the merger is fully completed. And to date, I know MMAT has been running with oil to some extent, so we are aware that that is the case in terms of incorrect classification. So again, very good point here, meaning the merger is not yet completed. Once the final FTD data is released for Torch, we will know exactly how many nakeds or FTDs there were at the time of merger date. I'm guessing it will be over 10 million. So again, that's a good estimate, because the calculation we had from George was 165 million shares, and then we saw another calculation from the SEC for 175 million shares qualifying for the dividend, giving this figure here of approximately 10 million. And finally, just to finish off here, we're going to look at clarification in terms of an investor who shorts a stock that is potentially going to give a dividend to the original owner of the share. So on the screen here, if an investor is short a stock on the record date, they are not entitled to the dividend, so the short will not get the dividend. In fact, the investor is instead responsible for paying the dividend owed to the lender of the shorted stock they borrowed. Investors short a stock if they expect it to decline in value. So we have seen MMAT very heavily shorted. We have seen it driven down in value, but what we can confirm is the shorts will have to pay the dividend. Again, finally, just to end the video, if anybody's interested in the challenge, details in the description below. And one other thing I'd like to also announce is there is a new Reddit group being formed from the Discord community. Details in the description below. This Reddit group is from the Discord member I gave the shout out for, so please join the group. The group is on the Reddit is going to be looking at potential squeeze stocks, so details and the link is in the description below. Thank you very much for watching. Please stay tuned.